Welcome. I am Jason from smarthelping.com, and we're going to talk about some best practices in financial modeling. I've done many hundreds of models for all kinds of clients from all sizes and shapes of businesses. And so, what I'm going to talk about is some of the things I learned and why I think um, some very important things should be kept in mind when you're financial modeling. Before I get into it, don't forget to subscribe to the YouTube channel. And if you want to support, get a couple perks, access to all my past live modeling streams about how I build things. Well, actually, it shows me building um, financial models from scratch. You can become a member. Now, best practices. So, first and foremost, the concept of entropy has to be taken into account. And what that means is things tend toward chaos, or put another way, things usually get less orderly over time and as you move through something and try and build things. So this applies to in life everything in the universe, including financial modeling. And it's actually very important because um, the main, and I'm going to try to follow my points here because I wanted to really stay on topic. So the main thing you have to keep in mind when you're trying to build a financial model is one, how many people can use it? How specific or not specific is it? And is it easily modifiable or not? And for example, you could have a model that just says, enter your revenue, expenses, hard code them in. Um, then you'll have EBITDA calculated by subtracting expenses from revenue, non-cash items, um, taxes, etc., net income. So this is technically a financial model, but it's just one it's actually very useful if you don't understand how an income statement works, and it'll help people. They can enter the different line items, and this will do the math to get you to what you want to see. So it's very hard to mess this up because it's so simple. But how um, good is it at trying to do a forecast of your revenue and expenses? Well, not good at all because you're just literally putting in numbers. There's nothing to back up the numbers at all. And so what I always focus on is the logic and configuration for how revenue and expenses are driven, and then I fit all of that into a format like this, and as well as a cash flow. But none of that means anything if you don't have the assumptions to back up what the numbers are saying. So it's a combination of things. You've got to have good simplicity, but you also need to have some, I guess, some configurations, which is going to give you some more chaos and a little bit more disorder, but you have to walk a fine line between how much, like how granular do you want to make something? For example, in this model here, I've got revenue assumptions based on 3 customer tiers for enterprise SaaS. And so I have to think to myself, how many businesses could use this at a general level and it's useful. They might have to put averages in for some of the figures or what have you, but in general, an enterprise SaaS company, 90 out of 100 could put their numbers in, and this would give them a forecast that has all the right logic, and it doesn't have things that have to be taken out or removed or changed around. So those things are very important when figuring out your structure of the model. And there's there's no empirically right or wrong, but the the things you want to focus on are can a user open the file and do they know what to do? And how specific or general is the logic building in the report that it outputs. Like for example, I could put in a bunch of different little things here, like every 15 customers that are added, they're going to get um, a free bonus, and then I want to do this and that, and you know, like you could put in a million different variations that kind of make it more useful for a certain use case, but then make it less useful for the broad um, general users that are going to be using the template. So you don't want, and the more complex you get, the more things you start to add, just the more chaos happens, and the less it just becomes a mess kind of. So you have to keep all that in mind when you're building, and these are the things I always think about when I'm trying to build and structure from scratch. Okay, so where are we here? All right, simplicity and directions. So first of all, every financial model should have something that explains what's on each tab. And this is to help keep it from being overwhelming. You should also have the tabs kind of color coded or labeled, like I have all the assumptions in light yellow, and then I've got all the reports in dark blue. And then all these are helper tabs here in no color. So at a base level, somebody opens this, they know there's something different between these first couple tabs and these tabs. They might not know what it is right off the bat, but they know there's a difference. So then you've got an index that says what every single tab is about. And that's a great start because, if somebody opens it up for the first time, they're going to be able to go through each tab, read it, and now they have immediately a good base for what is going on. And then they can go through instructions. Basically, I just have um, formatting, and I always stay consistent. Light yellow with blue text are things that are editable, and I point that out right on the control tab, and that's consistent, throughout the model. Only edit the yellow cells and nothing will break. That's the other thing. When you start to make too many complex factors in things, it's easier to break. And again, breaking is more chaos. It's not good. You don't want your model to break. If you just have a simple P&L, it's almost the hardest thing to break because you literally are just entering line items, and then you just got some plus and minus math that's happening. So it's pretty hard to break. It's easy to check. As soon as you start adding complexity, things get, it takes iterations and iterations, and it can get, the break more easily, um, harder to follow. So for me, I try to keep things as simple as we can here. Keep all the editable stuff in light yellow, and then if we go to the reports are pretty consistent. The monthly and annual details are going to be just based on, in all my models, they're just going to be the granular form of all the assumptions over a monthly timeline. So they'll always be different, um, but they will always get down to EBITDA if possible and cash flow. And those are the consistencies that no matter what I do, those are the two line items um, that will be output. If you have a model like, let's say, a manufacturing model, so there's so much variation that goes into a manufacturing model with depreciation, non-cash expenses that go into cost of goods sold. It's very difficult to create a general use model, but the more you can generalize it and still get correct assumptions that produce an accurate forecast based on whatever the assumptions are, that's actually super valuable. And that's one of my most popular higher level models is the manufacturing, because I've tried to turn the chaotic nature of the financials of a manufacturing um, organization into something that you can forecast. So trying to create order from things that are already very complex is also something that's valuable because it's hard to do. So I try to tackle some things that are like that as well, and try to simplify them. Where else? Where are we here? So it's Input cells. Okay, so logic unit economics versus three statement models. So a lot of people are going to say, well, financial model is just a three statement model. No, a three statement model is like the outer shell of a car. It looks nice. It's good. Investors like to see it because they can understand the language. It's pretty consistent over time, and it has to balance out. However, the engine and the unit economics are like, well, they're like the engine of a car and like the gas. If your engine sucks and your transmission goes, well, the car's not very useful when it can't run. So it might look nice, but it might just be sitting there on the side of the road in a ditch because the engine sucks. So one of the main why I believe, and I have like a general use three statement model on my site on smarthelping.com that can be used with almost any of the templates if you want to plug it into there, which is fine. But my focus on nearly all the models is the engine and the unit economics. And that's to say, you know, if you're forecasting revenue, an investor wants to know, well, what has to happen for that revenue to happen? And is that realistic? Is that growth realistic? Does the logic capture what's actually happening in real life? If all that doesn't make sense, or it just is not granular enough, then investors are going to have to ask more questions. And the three statement model might look nice, but what it's actually producing and telling is meaningless because there's nothing to back it up behind it. So my focus and what I always prioritize is the logic and configuration for how revenue is being produced. What has to happen and what expenses go along with that, and how closely is the logic representative of all the different things that happen in real life. Now, obviously, if you look at a forecasted balance sheet and you look at an actual balance sheet, there are so many things that can change an actual balance sheet that is almost meaningless um, to forecast it because it's going to be so unlikely that the balance sheet looks anything in real life like it did in the forecast. It's just, and I used to be in accounting, trust me, it's never going to be the same. It probably won't even resemble it at all. But what you can do with modeling with financial modeling is you can say, if I add X customers per month, and if they stay for X amount of time, and while they're there, they pay X dollars, and I can add, it costs me X, Y, and Z to add these customers. You can get a pretty good forecast, at least, of what the revenue looks like based on those things happening. And then investors can go and say, well, what if you only add, you know, you know, 20% less customers? What if it costs you more to add the customers? What if your expenses are actually higher than what you're saying? All that stuff is what really gives you an accurate representation of um, the financials given the certain assumptions. Um, Formatting useful. So formatting again, is basically what's editable, what's not, and then how are you flowing the all the different assumptions into a more formal report like a P&L, distributions, visualizations of everything is also a big thing with financial models because this gives you a more digestible view of what's going on instead of just looking at numbers. Um, but one of the last things I want to touch on, unless I have more things to ramble about, I might think of something, but it's cash flow and cash requirement. So this is another very important thing with startup financial models is based on all the assumptions, uh, what's your equity requirement? So this number right here is actually one of the biggest outputs of all of my models. And what it is saying based on any startup costs you have in time period 0, and then any burn you might have, which means negative cash flow, and that means if you've got negative cash flow, that has to come from somewhere. And if it's a startup, it's going to have to come from the initial investment because you haven't made any profits or have any working capital. So this number I always get to in every single model is the minimum equity required to stay afloat, and that's very important. Um, and again, it's calculated if you look at the monthly detail. I do this on every single one of my models. You've got a running cash position. The minimum cash position is what that number is going to say, and that counts period zero cash flows as well. So if all your startup costs are here, and then you start whenever you do start operations, you think you're going to be profitable each month, then the minimum equity required is just going to be your initial investment in the startup costs. However, in this case, you can see there's some startup costs here, but then there's also burn because they're not profitable for, well, there's some months that are, some months that aren't. But you can see the max negative cash position is 239,000, negative 239, and then profits start to come after that. And so here it's 248. Well, there must be another. Oh wait, no, actually this is the biggest negative position. And then there's some positive cash flow here, negative here, and this assumes there's enough positive cash flow on an accumulated basis to cover this negative amount. So that's why this is not added, because these two net positive. Now I do a whole bunch of logic to figure out, actually how much equity is remaining, what should be distributed, not. But the point is, one of the main things that an investor wants to know about a model is how long is your cash going to last? What needs to happen in order for you to survive, and when are you going to become profitable? And what's the timing of that? So all very important things with financial models, all important concepts to keep in mind. Um, and I guess I didn't touch on the one thing I really wanted to focus on was how how closely does the logic represent real world activities? And that's very hard to get right, but if you can get close to it, it's going to give you a better forecast because we're trying to model the real world scenario as best as you can, and sometimes that does involve a lot of complexities to get to a simple thing. For example, if you're a manufacturing company and your customers are mainly those that repurchase, and you want to know how much, for how long do they repurchase something, and what's the value of their repurchases over time, and if that's going to drive your revenue, that's a pretty good basis for figuring out the logic for how revenue can be created. You've got customers, maybe um, they are returning customers that purchase for 5 years. They purchase X dollars, and that might deteriorate over time, or it could stay the same or go up. But that's another kind of piece of logic that you might want to. That's it's complex to model, but it shows a better representation of what happens in real life. And with modeling, you're never going to be perfect, and it's always going to be averages. And it's but what it can do and what you want the unit economics of a model to be able to do is get close to the flow of how you're interacting with your customers. What does it cost you to do that? What does it cost you to keep the lights on? What are your variable costs that depend on revenue? What are um, you know what are all the different things that will affect revenue, and how can you lever them and change them over time? That's another reason why in all my 5-year models, or some of them are 10-year, I will let the user be able to change things in each year, because it's likely that they are going to change over time, and having one static number, like to define customer growth per monthly growth, is probably not going to be accurate and give a really skewed forecast. But if you can change that growth over time, it's now closer to reality because you're likely going to have a changing growth rate. Same with churn. Uh, you hopefully will try to improve your retention rate, which reduces churn over time. So all those things, that's another definitely a best practice with financial modeling is you're going to be going out 3, 5 to 10 years, and you need to have levers that can change over time and are not just static in 1 year. Now, some things like here, percentage increase in contract value at renewal, it's a static because it's so complex. There's no reason to try. It's already complex enough. There's no reason to try to have it change over time. But what we do have change over time, like in this example, is the average contract value. So it's likely that maybe in year 4, the average contract value for customers that join in year 4 might be higher than in year 1 because you've had more offerings. You're increasing, you might be increasing your prices as you become a better functioning company. Your products are better, uh, and you might have more offerings that increase the value of customers in general. Um, with like ad spend, it's definitely going to change over time. Uh, all these in every single model with the revenue and expense logic is different. Mostly the revenue logic is really different in every model because it just depends on what the business is and what's best to create a forecast. What are the best configurations? And sometimes there's no right answer, but you have to do something that looks reasonable. So, having said that, you can see smarthelping.com. Uh, I published over, what do we got here? 95, 103, 14. I've got 116 templates here, and every single one of them was built with what I just explained in mind for every single one. And some of them are for industries. I've got some joint venture stuff here that's kind of you plug in a cash flow at the top, and then it does all the different logic strings. Um, but all kinds of models. In general, the principles that I just explained are involved in every single one of these. And the goal is to make them usable to the most amount of people, but also have the most amount of um, kind of usefulness that can be without making them only useful to a very certain specific segment of a given industry or whatever the use case is that it's trying to provide. So I guess that's about all I got. I really wanted to get this video out. I tried to plan it out so it was, you know, I try to follow a thing here because sometimes I just lose my train of thought. Um, but anyway, that's all I got for you here. Don't forget to subscribe. Uh, Join the Smart Helping team. You'll get access to all my past live streams of how I actually build models from scratch. They're usually, 1.5 to 2.5 hour videos, and I literally go in there and you can see me start with a blank Excel sheet and then come up with something, that looks like this in the end. Uh, and I think that's really good for anybody that wants to get into this industry of building models or that just wants to see kind of my thought process that went into different logical assumptions and configuration schemes. So all my members will have access to that and to become a member of the Smart Helping team, which is just basically my YouTube stream. It's only $4.99 a month, and I'm doing new videos and new models almost every couple of weeks. But I also do side streams and different things during the week. I've been doing that more lately, but it's just a way to learn. And there's not a lot of good, consistent, and updated financial modeling places to learn, or places to learn financial modeling and see what's going on. And everything I do is based on what I've had people pay me to build. And that's kind of how I got started in modeling in the first place. Is I took on jobs where they said I need this, this, and that, trying to raise money or trying to prove out a model, and I need you to build it in this way. And I'm doing that hundreds and hundreds of times for many different complex pieces of logic. Got me to where now I can just build anything essentially and put those things I learned into practice on what people value and what people want to pay for and what's useful. So now I take that in turn and recycle all the knowledge out to you guys, to anybody that wants to listen, and um, And that's what this is all about. Uh, and on here, note I've got bulk discounts on different templates if you want to buy, 5 mid-level or 10 mid-level or all the mid-level, all the intermediate, all the upper tier. I've got a couple ultra in there, or all the templates that I actually have. I think that's a great deal. There's so much value here in all this stuff. So much value if you want to get into it and learn and just try to um, you know, get into the space. I've got SaaS models, joint venture, accounting things. I do some trackers as well in Google Sheets. Often those are in Google Sheets. Data tracking things, dashboarding, all that stuff. Because a lot of the jobs, or some of the jobs, involve doing um, less financial modeling and more of tracking things in a database and putting report and summaries out of that. Um, but I'd say about 85, 90% of all these templates are financial models. All right. Well, I guess that's all I can say about that. So I'll see you guys on the next one.